Welcome back to Explain the Charts. Today we're going over the USDJPY and analyzing its recent movements based on both the news and the chart data. As you know, the Japanese yen has been strengthening lately, and the news has been reflecting this. One of the key factors driving the yen's appreciation is the possibility of intervention by the Japanese government. On the daily chart, you can see the USDJPY pair has been trending downward for the past few weeks, with the price breaking below a key support level around 153.00. This suggests the yen's strength is not just a short-term event, but part of a broader trend. While the pair has been pushing higher recently, it's important to note that this recent rally is occurring near a significant resistance level. This resistance level, around 154.00, could represent a major hurdle for the US dollar. Let's now switch to the 1-hour chart, where we can look at the more immediate price movements. On this time frame, you can see the USDJPY pair has been consolidating in a narrow range for the past few hours, with the price hovering around the 152.50 mark. This consolidation suggests a potential breakout could occur in either direction, but it's hard to say which way it will go just yet. Now, let's zoom in on a specific range of candles, looking at the 15-minute chart from November 5th to November 6th. During this period, you can see the USDJPY pair experienced a volatile trading session, with the price moving rapidly between a support level near 151.50 and a resistance level near 152.00. This kind of price action indicates uncertainty in the market and the potential for a breakout in either direction. The news and chart data seem to be telling the same story. The yen is strong, and the USDJPY pair is facing significant resistance. This suggests that the potential for the US dollar to continue its recent rally is limited. Traders should be cautious about being bullish in this environment. Traders looking for short-term trading opportunities could consider shorting the USDJPY pair if it breaks below the recent support level around 152.00. However, it's important to remember that the yen's strength is tied to global market sentiment, and a shift in risk appetite could quickly reverse the current trend. Long-term traders, on the other hand, may want to wait for a clearer signal before making a move. The daily chart shows a potential for a bearish reversal, but the recent rally suggests the bears haven't fully taken control. It's likely that the USDJPY pair will continue to be volatile in the short term as traders navigate the uncertainty surrounding intervention and central bank policy. One thing to watch for in the coming days is the release of key economic data, both from Japan and the United States. This data could provide further insights into the strength of both economies and influence the direction of the USDJPY pair. Traders should pay close attention to these releases and adjust their trading strategies accordingly. To recap, the USDJPY pair is currently facing strong resistance near 154.00, and the yen's strength is likely to continue in the near term. While the recent rally could be a short-term bounce, traders should be cautious about being bullish. A break below the support level near 152.00 could signal a further decline in the USDJPY pair. Long-term traders may want to wait for a clearer signal before making a move, as the market is likely to remain volatile. Stay tuned for upcoming economic data releases, which could influence the direction of the USDJPY pair. Thank you for joining us today. Don't forget to subscribe to Explain the Charts for more in-depth analysis of the markets.